war just hit and I made $3,000 in 15 minutes. No, this isn't luck. This is how smart traders profit from chaos. I'll show you the exact trade that made me 3K fast and how you can spot these opportunities before they happen. Smash the like now, because when the next war news drops, you will be making this trade. In order for you to profit from the war that is happening right now between the US, Iran, Israel, Palestine, all that, if you want to benefit from this while other people are just there, you need to understand four things. You need to understand market movement. You need to understand volatility. You need to understand candles. And you need to understand how to take profits. And I am going to show you exactly that step by step by step. Now, let's talk about market movement. The market does only three things. The market will either go up, so if we are in a very good economy, we will see the S&P 500 going up. If we are in a very bad economy, we will see the S&P going down. And not only the S&P, but we will see the market just going down. And sometimes the market just consolidates. This means that there is a lot of indecision in the market. So, with trading war news and just these bad things that happen to the world, and with calamities that happen in the world, like war, famine, or pandemics, what this does is that it introduces volatility into the market, because it either induces fear or greed in the market. And what this does to the market is that it brings volatility. So the market now chooses a direction. We are either going up or we are either going down, and we are going fast. We are not consolidating because people are making decisions. There is emotions in the market. Now, when there is volatility in the market, then what happens is that you will see the volatility shown in the chart. For example, let's look at a scenario where we have high volatility in the market. So, for example, here, we can see that price moved aggressively up. So it means that at this time, we had a lot of volatility in the market. Same time as this, we see a big aggressive move up. Then we can see here, look at this. This is all volatility in the market. So when they pick a direction, it goes in that direction. So whether it's good or bad. And with news, you never know what could happen. All we know is that news brings volatility in the market. We know that war brings volatility in the market. Job is to identify the volatility in the market using candles. And that is what I want to show you. Now, candles are the basic unit of analyzing the charts. And a candle is a box with a line like that. Now, it's very important to know that the color of a candle tells you where the market wants to go. So that is how we have simplified everything when it comes to candles. So if you see a red candle, know price wants to go down. If you see a blue candle, know that price wants to go up. No nonsense, like that. So red is down, blue is up. Now, a candle has a high and a low. So this is the highest point price has reached on that candle, and this is the highest point price has reached on that candle. That is the high of both candles. So the high is always the high, it's up there. We also have the low. So a candle's low is the lowest point price has reached. So we can see that. And the significance of the high and the low shows you where you have your areas of support and resistance. Because if you think about it, what is happening is that price failed to continue higher past this area. So if we continue higher, it means that we have overpowered whatever was pushing the market down. Same thing, if we are going down, then we fail to continue past this line, and the next candle continues past that line. It means that the blues now, they are taking over. And it's just understanding, uh, with candles, it's just understanding whether it's red or green taking over. That's it. And how do you know that? This brings us to our next thing, which is identifying types of candles. So for this, we will primarily focus on two types of candles. So we have breakout candles. A breakout candle is a candle that breaks out of the previous candle's high or low. It can happen even to the red side, like that. So notice this candle breaks out and stays outside of the range. So it's a breakout. It means it has broken out and closed outside. This is what we are interested in. Now, there will also be a situation where price will break out and then return inside of the candle like that. That is not a breakout. And now what you are left is a wick, a line like that. That is not a breakout candle. Now, in the situation where you get a candle like this, all we do is we move our high to that new candle's high and low. And then now we are waiting for the next candle to break out. If it breaks out like that, now you have a breakout candle. This is the simple pattern we use. And even to the downside, it has to be two red candles. One that gives you a high and a low, and the next one is a breakout candle. Once you see this, prepare yourself to take some profits. Because here's the thing, the market tends to continue the direction of the breakout. So if we break to the upside, expect the market to continue moving like that. Why? Because we have volatility in the market. So when we have volatility in the market, price picks a direction and stays in that direction for a while, just like we've seen here. When we have volatility in the market, price just goes up or goes down or goes up, like that. When we have volatility in the market, you will always be guaranteed to have one direction. And so how does this apply now? This applies to trading by understanding the times when we have the most volatility in the market, which is for Asia. And so we have 3 times when we have the most volatility in the market. Number one is Asia. This is from 9 p.m. to 11 p.m. New York time. Then we have number 2, which is London. London begins at 3 a.m. and ends at 5 a.m. New York time. And then we have number 3, which is New York, which is my session. This is from 9:30 a.m. in the morning to 11 a.m. That's it. So if we go and look at these times, especially the New York session, you will see that from 9, so this is 9:30 to 11. You can see this is when we had the biggest move. The previous day, we see 9:27, 9:30s from here. Notice from 9:30 to 11 is when we had this entire move. And we ate this move. So this is news. This is high volatility in the market. If you go back and look at, see, this is 9:30. Big moves. How can you not eat this? This is easy money. So that is exactly how you profit from the market. So if you want to learn more, I have created a course explaining this system step by step by step. You can check it out, link in the description. I will see you in the next video. Peace out.